Imagine a world where political gridlock suddenly gives way to economic optimism. That's exactly what happened when the U.S. Senate finally approved a bill to end the government shutdown. But here's where it gets controversial. While markets celebrated, some experts argue this relief might be short-lived. Let's dive into why gold, stocks, and even the yen are making headlines, and what it all means for you. In a dramatic turn of events, the U.S. Senate passed a deal late Monday to restore federal funding, ending the longest government shutdown in recent memory. This breakthrough sent ripples across global markets, with Asian stocks climbing and gold surging nearly 3% overnight, comfortably surpassing the $4,100 mark in early Asian trading. The Nasdaq, which had been reeling from last week's jitters over AI firm valuations, rebounded with a 2.3% gain, reclaiming much of its lost ground. South Korea's Kospi and Japan's Nikkei also joined the rally, rising 1.3% and 0.4% respectively, though markets in Hong Kong and China remained slightly subdued by mid-morning. And this is the part most people miss. The shutdown's end isn't just about political compromise. It's a green light for the resumption of critical economic data releases. As Vasu Menon, Managing Director for Investment Strategy at OCBC in Singapore, pointed out, this could pave the way for interest rate cuts, further boosting gold prices. Meanwhile, the SP 500 enjoyed its biggest one-day gain since mid-October, closing up 1.54%, while the Nasdaq notched its largest daily increase since May. But not everything is rosy. Safe haven assets like the Japanese yen took a hit, sliding to a 9-month low of 154.49 against the dollar, as risk appetite returned. U.S. Treasuries initially retreated, though they recovered some ground as Federal Reserve officials cast doubt on the likelihood of a December rate cut. 10-year Treasury yields peaked at 4.147% on Monday, before settling at 4.11%, with traders already looking beyond the shutdown's end. The bond market's closure on Tuesday for Veterans Day added another layer of complexity. Here's the controversial question. Is this market rally built on solid ground, or is it a temporary reprieve? Jack Chambers, senior rate strategist at ANZ in Sydney, argues that markets hadn't reacted severely to the shutdown in the first place, so the reopening might not trigger a sustained sell-off in rates. Yet, prediction markets like Polymarket are already pricing in a full reopening by week's end. What do you think? Is this optimism justified, or are we overlooking potential risks? As we watch these developments unfold, one thing is clear. The intersection of politics and economics remains as unpredictable as ever. Whether you're an investor, a policymaker, or just someone trying to make sense of it all, now's the time to stay informed and engaged. Let us know your thoughts in the comments. Do you see this as a turning point, or just another blip in the financial landscape?